Cryptocurrencies, Bitcoin, Ether, they have corrected with the equity markets. More and more hedge funds are involved in them. So when the market corrects, we do see higher correlations these days, although over a full market cycle, the correlation between crypto assets and any other asset is extremely low, which means for diversification purposes, crypto is a very interesting asset. In our Big Ideas 2022, you will see how we break out crypto. Our understanding is evolving, and we are able to describe it in three ways: a money revolution, a financial revolution, and a next generation internet or metaverse revolution. So if that piques your interest, do take a look at our Big Ideas 2022. I'm very proud of our research. Our research is unlike anything else you'll see out there. You will see ours because we give it away.
This is the Bitcoin headline title: "The price of one Bitcoin could exceed $1 million by 2030." And there's a bunch of math that goes into it. And this is the reason why I'm not an analyst, because I kind of don't really understand how these numbers came to be. But Yassine, can you kind of just walk us through the slide about how this $1 million Bitcoin prediction came to be?
Sure. I think for context, it'd be helpful if you could just briefly go to the previous slide to give you just what that actually means in the context of traditional asset classes. So first off, if you believe that crypto broadly is a distinct asset class that's also going to affect other asset classes, then you'd imagine that in the next few decades, it is going to be on par with other asset classes. So we've sort of sized the opportunity as in the next 10 years as being a 25-fold from where it is today, which would amount to about a $28 trillion market cap. So with that, the $1 million does sound quite like an insane number to throw around. So if you go to the next slide, we can break that down.
Yeah, and real quick, I will note, Yassine, though, that this $28 trillion price would be almost 3x gold. So that in itself is fairly bold.
That's right. That is right. And so you can kind of make the argument again that Bitcoin is going to challenge gold as a global store of value. You can see in the opportunities slide that we actually estimate that Bitcoin will, in the gold use case, only capture around 50% of gold's market share as a digital store of value. But I'd make the argument that Bitcoin is a 100x better version of gold. It's more portable, it's more divisible. Every marginal kind of individual who's transitioning from the physical to the digital world isn't thinking about buying gold. I've never considered ever buying gold, and yet every chance I have, I buy Bitcoin. It is a big number. It is relative to when we first sized the opportunity, though, a smaller jump. So we actually first gained exposure to Bitcoin in 2015 through GBTC when Bitcoin was trading around $200. And at the time, we had predicted a $50,000 price. And you'd imagine like a $200 to $50,000, you must be absolutely absurd, right? That's a 200x from here. So we're effectively predicting a 50x to a $50,000 to $1 million price, which in relative terms is a 20x. So actually an order of magnitude less than kind of the previous predictions that we've had. Is Bitcoin's use cases, given it is a monetary asset that has a fixed supply, are additive, right? So there's a fixed 21 million Bitcoin supply cap, which means that for every Bitcoin that's being used as a digital gold, can't be used as a remittance asset. And for every Bitcoin that's being used as a remittance asset, can't be used as protection against arbitrary asset seizure. So when you combine kind of the 21 million fixed supply with the fact that that supply itself is becoming more and more longer term focused, where people are buying and never, adding to and never willing to sell, then the price multiplier as well increases, where now for every dollar that flows into the asset, the reflection on what that looks like for market cap is not necessarily $1. It might be $10, it might be $25. So the point is that for many of these use cases, specifically for the nation state treasury and for the corporate treasury, we have assumed a price multiplier, where you look at kind of the liquid supply that's available in Bitcoin, and you just take that as kind of the denominator set that's absorbing, new demand. I look at Bitcoin as like what many people call like a Veblen good, which is a good that actually the demand for the good increases as the price increases. So like, luxury is considered a Veblen good. But more than that, it's like if you employ Bitcoin as this long-term asset where the number one rule of Bitcoin should be that you forget that you own any Bitcoin, then by definition, there is a supply shock that isn't necessarily priced in today. In 10 years, if you have nation states competing on, amassing Satoshis, then every dollar that's going into Bitcoin is going to be sucked up by a subset of that 21 million fixed supply. So there is definitely a case to be made that the more we see nation state adoption institutions, and the more that it's seen as less of a speculative bet and as a long-term investment, then we might see this kind of fly based on just small inflows. And even if we don't see the small inflows, I'd urge you to read it for the audience, our white paper that was published a year and a half ago that details some of these use cases, including economic settlement network and digital gold and seizure resistant asset. These are all, I think, pretty reasonable estimates. If you do believe that Bitcoin is this global monetary asset and really kind of a generational opportunity to really put your foot in the ground in the digital world.
Want to see part 2 of this interview? Please leave a like and subscribe. Thank you so much for watching.